Creamer Media's Mining Weekly is interviewing Keith Liddell, the founder and chairperson of Lifezone Metals. Keith is well known in South Africa as the creator of Cal technology, a smart way of processing platinum group metals far more efficiently. But now, the New York-listed Lifezone Metals that Keith leads has taken control of the large Kabanga nickel project in Africa's Tanzania. Hi Keith, it's great to chat to you. What is the latest news on the progress of the proposed Kabanga project, which seems to have the potential to be a big source of future nickel?
Thanks, Martin. Kabanga is a fantastic project, and as you say, it's very big and it's very high-grade nickel resource. And those two things, large tonnage and high grade, don't often come together. You either get one or the other, but not both. And this is what makes Kabanga so great. So you'll see we've delivered the feasibility study and initial assessment in June and July. The feasibility study contains the reserve statement, which at the project level is 52 million tonnes of ore, grading at 2% nickel. The reserve mine life is 18 years, and we produce at steady state about 60,000 tonnes a year of nickel in product. To put that in context, it would be one of the larger nickel mines in the world, particularly underground nickel mines. And the financial metrics at the project level are excellent, being a post-tax NPV of $1.58 billion at an 8% discount rate and just over $8 a pound nickel price in that, with an after-tax internal rate of return of 23%. So on a capex of just under $1 billion to build the mine and the concentrator first, a $1.858 million NPV is eminently fundable by both debt and equity. And our feasibility study initially is based on concentrate sale, and the Kabanga concentrate runs at 17.5% nickel with no penalty elements contained in it at all. So as you can imagine, the smelters are all in demand for that concentrate as we start up. The initial assessment that we put out in June covers the whole project, including the refinery that's going to use Lifezone's Hydromet technology. And we're going to stage that in to come in 5 years after we start up the mine and concentrator. That's so that we can generate the cash flow to pay for most of the refinery capital expenditure, but also de-risk the project from a debt and equity perspective so that we can build the mine and concentrator as fast as possible. So the inferred resources are contained in the initial assessment, and they add 6 or 7 years onto the mine life as well. And we'll drill those out from underground once we get down there, and we can get the right angle of attack to bring those inferred resources into production in the later years of the project. And the initial assessment contains the refinery, and this shows you the benefit of the refinery. The after-tax NPV of that increases from the feasibility study of concentrate sales only of 1.58 billion up to 2.37 billion, again with a 23% IRR. So the internal rate of return stays the same, but the refinery massively increases the net present value and takes the mine life with the inferred up over 25 years.
To what extent do you expect Kabanga to uplift the lives of the people in northwest Tanzania?
So yeah, as you say, the project is in northwest Tanzania, and it's actually on the border with Burundi. And you can see it from the camp actually. And it's very important to us that we bring lasting and tangible benefits to Tanzania and that local region, which is an agrarian population. And we work closely with the Tanzanian government on this at all levels. So from central government level all the way down to region and district and then village level with the village leaders. And to demonstrate this, we've already made all the initial cash compensation payments for all the affected people and families and households that sit on the mining lease that we will have to relocate and disturb. We've already paid the cash payments for their fixed assets and their crops to those community households in that area, way before we have to. And a lot of those people are now using those cash payments to better their lives, to build new businesses, to actually start to build produce, developing businesses that feed our camp, and then also better themselves so they can start to prepare for jobs that come as we build and get the mine into production. So it's really important to us to have done all that very early, and that's a big part of the capital expenditure that we've made to date. We've already built half a dozen show houses in the relocation sites that people will move into, and we've taken feedback from those, and they're different designs, so people have decided what designs they want, so we've been very proactive in that. And our local subsidiary, which is called Tembo Nickel, Tembo meaning elephant, is already 95% staffed by local Tanzanians. And we're really impressed with the skills that already exist in Tanzania, both technical and commercial and corporate. And again, I think it's a testament to the fact that there's an established mining industry in Tanzania, and those skills already exist. And as the mine will be a long life mine and effectively multi-generational, we're very focused on bringing skills development into the local population, into the younger persons. And so they will have career paths in the mine as it's built and operated. So we're very focused on that. And that leaves the lasting legacy, I think, is that educational and skills development legacy. That's what mine should leave behind when it's reached the end of its life. But as I say, it's multi-generational. The mine and concentrator operation has about 1,090 permanent job positions, and our plans are 95% of those will be Tanzanians. And we can see that after the skills development matrices that we've spent 2 years looking at and understanding.
It seems the Tanzanian government is also going to have skin in the game. It looks like you're going to give 16% of the operating company to the government of Tanzania.
Yep, they already have that, and that's part of their mining and mineral legislation, that they have a 16% interest in all mining licenses. And Tembo Nickel has its granted special mining license, 200 square kilometres, quite a large mining license, because there is extensional resource potential, some of it drilled out, some of it still to be drilled on both ends of the strike. So it is a big area, and the project will only grow from that, from what the geologists tell me. And so the Tanzanian government has a 16% carried interest. A lot of people call it free carry because that's what sticks in people's minds, but I call it a deferred carried interest, because effectively Lifezone Kabanga Nickel, our subsidiary, loans the funds that we raise outside of Tanzania down into Tembo Nickel to fund and build the operations. But then out of the cash flow, we can then take those shareholder loans back up at 100% level. So it's really a deferred carry of the 16% of the government, not a free carry, in that we'd never get that 16% of the funds we put in back. So we interact intensively, our management, both at Lifezone, our CEO, Chris Showalter, and also Ben Buzunzu, head of country at Tembo Nickel, have excellent relationships into all levels of the Tanzanian government, and we keep them briefed fully on how the project is progressing, what our thoughts and plans are, and very interactively discuss what the government sort of would like to see and what we would like to see as we move through to finalising our framework agreements and joint financial model. So it's a very interactive and collegiate relationship, because both parties, us and the government, we want to see this mine built as quickly and as rapidly as possible and get it into production. Particularly from our side, we think that nickel price will start to trend up over the next few years, and we want to be commissioning into a rising price rather than where we are at the moment, where the price is in a bit of a doldrums.
What markets, and there could be new markets as well, do you envisage will be needing nickel most in the years ahead?
I've never seen a good or an accurate or a true forecast for nickel supply and demand and price out 5 years out, because nickel is so volatile and the supply demand situations change. And no one ever really goes back and does a post-mortem of, were they right or wrong 5 years ago. I think everyone looks forward, not back. But obviously there has been a very big dislocation in the supply and demand sides of nickel over the last 5 years ago. But in my experience, it's always been the case over 30 years of developing nickel projects. So the watchword we have is flexibility. We have to be flexible in how we think and how we view and envisage and strategize the project. So I think there's going to be actually a big demand side inflection coming quite quickly from the global defence industry as the world invests, and I think unfortunately has to invest in more armaments that all require stainless steel and specialised steels that contain nickel, for gun barrels, for armour, for ships, for whatever. And I don't think, and I'm not seeing it yet, that it's factored into the demand side analysis much at all. But I think it's going to be big, and it's going to be bigger than anyone's thinking about at the moment. And I also suspect, and sort of from what I hear on the industry, that's too much supply side coming out of Indonesia for producers there, mostly Chinese, to be fully comfortable to be exposed to. And we see the nickel in Indonesia and policies tend to be a bit whimsical from the Indonesian government, and they can come out with edicts that can change things within months. And definitely we're picking up a nervousness from Chinese being exposed to fully exposed for a lot of them into producing nickel out of Indonesia. So I suspect that there's going to be some change there. And we're certainly seeing that non-Indonesian nickel projects seem to be getting a lot of interest now from inquiries we're getting coming in. And then on the demand side, the EV and electrical storage and battery markets, they're still evolving. And it's amazing how fast the Chinese EV manufacturers are developing models. And their models, they're so sophisticated. And for $20,000, you can buy a Chinese EV in China that has everything you want on it. And those prices are now filtering into the Western markets. And so what we're seeing in this cadence of our offtake discussions is the Western auto manufacturers have effectively dropped out of offtake discussions at the moment, when a year ago they were really gung-ho. And that includes Japanese and Korean auto manufacturers as well. And that's one of the reasons why it's sensible for us to not go full hog on the refinery now, because effectively it's hard to know what products exactly we should be making that we freeze into that design. And I think we need to let that demand side of the market evolve a bit more before we freeze some flow sheets there. But the nice thing about our hydromet design is because we make purified nickel sulfate, cobalt sulfate, and copper sulfate solutions that then can either be electrowon onto LME grade cathode or into battery grade nickel sulfate or cobalt sulfate, or even go down the added value route in Tanzania and make battery precursor materials. Our hydromet route actually makes us really flexible, much more flexible than smelting matte route and then electrorefining of matte would be. So we're fully happy that the design we've got to get our nickel into solution and purification is ready for what the market wants, and we'll be assessing that over the next few years. And we'll be putting up a big demonstration plant of that in Tanzania as part of our first stage building of the mining concentrator. So again, that's the beauty of our hydromet processing. It gives us much more product flexibility options than traditional smelting route does.
You're referring to high grade. It must be genuinely high grade because you New York listed. I don't think you'll get away with it. But if you can just give us a bit more insight into how you are able to claim a high grade, and also a little bit more into the copper and cobalt byproduct.
You know, the reason we wanted to list on the New York Stock Exchange was we knew we were going to have to raise about $1 billion just for the mining concentrator and another somewhere between $600 to $800 million for the refinery, depending on what products that we make there. And, you know, that's a lot of money, even if we do 60% debt, 40% equity. And we thought that we would like to be on one of the deeper pools of capital. So why not go for the deepest one, the NYSE? And so that's where we've ended up. And we've certainly done okay there so far. I mean, share price has followed the nickel price on a very strong correlation like pure nickel companies do. But we're happy with our New York listing. And the high grade, you know, means that we've got a quality asset on a quality market. By high grade, like 2% nickel is really high. And then to sort of give you an idea of what the cobalt and the copper pay. So our all-in sustaining costs in our feasibility study before taking credits back for the nickel and copper of $4.48 a pound of nickel. So that's with the nickel price at the moment of what, $7.50. So there's our all-in sustaining cost margin's big. You know, that's a massive margin for a mining company, and that puts us into the lowest quartile of operating costs. But then that comes down to $3.36 a pound when we take the value back from the nickel and the cobalt in concentrate payabilities. So that gives us $1.12 off our all-in sustaining cost to bring that down to $3.36. And to put that into context, our mining costs are about $1.70 a pound equivalent. But our non-mining costs, or all our surface costs, running the concentrator, power, water, concentrate delivery to a smelter overseas for the first 5 years or so until we get the refinery up and going. G&As, salaries and everything else comes in at $1.15. So effectively at $1.12 byproduct credits, the nickel and cobalt pay for all the above ground costs. So that's what, again, pushes us not only into the lowest quartile cost of the global industry, it pushes us right down into the lowest part of the lowest quartile cost. And that's really what the high grade, the 2% grade of the Kabanga nickel ore body does. It really makes a big operating margin, which is what drives those high NPVs and the 23% internal rate of return.
And you're resident in Australia, and the operations of Western Australian Nickel are there for the taking. I think they're dormant or suspended. What makes the Tanzania opportunity instead?
Well, we first moved on Kabanga in 2019, so it's like 6 years ago. It's gone in a blink, really. But and that was just before COVID locked everything down. So we had our offer accepted, I think, just in the end of 2018, and in January 2019, I got all our team together in Perth, and we sat down and strategized Kabanga on what we'd do just before COVID came and closed everything down. So effectively, when COVID closed everything down, we had an operating plan and our team knew what to be doing. So we used COVID to really plan for Kabanga. We raised, I think, about $12 million privately from our investors that have backed me personally on a lot of projects I've done. And as a company, Lifezone was really heavily focused on PGMs in South Africa through our KEL technology. But we weren't really able to guide our own decisions there. We were subject to other people's decisions. So we wanted a project that could really take our hydrometallurgy under our decision making and bring value to our shareholders, but also enable us to demonstrate our hydromet technology. And we wanted to diversify away a bit from PGMs because, we could see that EVs were maybe going to be a reality, and who knows what would then happen with autocatalysts. So we went for Kabanga, and we were fortunate enough to get it, really. And the hydromet side of things was instrumental in that with Tanzanian government. But we keep looking at all the base metals, nickel, PGMs, refractory gold, anything that can use our hydromet technology, not only in Western Australia, but globally. And we think that, and we've got a massive database on how all of these projects react to hydromet technology now, both through test work we've done for clients, and it's mineralogy driven. So from the mineralogy, we know how a concentrate will act when we put our hydromet processes onto it. And it's all high recoveries into dissolution, like high 90%. So it's very efficient. So we think that there is potential in Western Australia, also in USA, for centralised refinery to refine base metals and also refractory gold sort of alongside it, because it uses similar processes and unit equipment and infrastructure. And we keep looking at that. It's hard to consolidate because as soon as when we talk to people, we bring value to projects, and everyone, it's always like they want to do it themselves. But as we go forward and as we bring Kabanga into production, we can lift our heads above the parapet a bit, and we maybe get some funding out of Kabanga as we go. We like to think that we can take our centralised refinery in concept in Tanzania that we've got at Kabanga and then replicate that in places like Western Australia and USA, where local minerals can be further beneficiated into metals and further downstream products. And we've looked at lots of projects in WA, and as I said right at the beginning, you need grade and size, and a lot of Western Australia projects are either low grade and big, or they're high grade and small. And a centralised refinery, if we could fund that and bring in partners to fund that, would take the smaller high grades and the larger low grades, blend them, concentrates together into that refinery, and that's where you can maybe get the mix of high grade and longer life and bigger tonnages by blending it all together. So we've got some ideas there, but we're very much Kabanga focused at the moment.
How far is Lifezone from taking an FID on Katanga nickel?
We're into that phase now. Finally, it's sort of the home stretch, really, before construction. And I never look at construction as the home stretch. That's the start of a new phase. But so the Lifezone board has accepted and approved the Kabanga feasibility study that we put out in July, and then straight away empowered management to formally commence the FID process. We think that'll take till somewhere around the middle of next year. It really depends on how fast the debt process moves, and we're looking at about 60% debt of that, roughly $1 billion, slightly less. So about $600 million of debt funding. And the critical path to that FID is definitely the banks, as always. But we actually started at the beginning of the year. So we've got two banks mandated, Standard Chartered Bank and Societe Generale. Standard Chartered is undertaking the pre-FID financing and has assisted with replacing BHP as a partner in Kabanga Nickel. Both of those we've just successfully done in the last few months. So we've now purchased back BHP's 17% of our subsidiary Kabanga Nickel Limited. So we own 100%, Lifezone owns 100% of Kabanga Nickel Limited, the holding company that then owns 84% of Tembo Nickel, with the government owning the other 16%. And last week we announced that we've raised 60 million pre-FID short-term bridge financing from Taurus Funds Management. And that 60 million is a short-term 2-year loan facility that means that we can keep spending on Kabanga as we're going through FID, because both us and the Tanzanian government want to keep that momentum going. So we have a whole on-ground development budget to keep momentum going. So starting the mining box cuts next year, keeping the relocation momentum going by commencing house construction, so that we can move people well in advance of when we need to, and all the other associated things that you need to be doing in pre-development of a project, all the front-end engineering designs and everything else of the mining concentrator. And then getting the big one is the mining contract, getting that finalised and bedded down and ready to go. And so Standard Chartered are also looking at what we call the phase 2 funding after this pre-FID short-term funding, which is looking to bring funding into Kabanga Nickel at the Kabanga Nickel level, not the Lifezone level. And that's either through a new partner or just equity investors into Kabanga Nickel itself. And we're well into that due diligence process. We started that process probably 5 months ago. And as we speak, the final due diligence site visits at the Kabanga site are happening. So we're well into the equity component of the FID as well. And we've had lots of support from the US Development Finance Corporation, who have done all their due diligence as well, in preparation to come into the debt syndicate through Societe Generale's management there. So we planned for this from the beginning of this year and sort of earlier. So we're not starting from standing now. We've actually pre-planned this 6 months ago. So we're well into FID. And we're confident that we can be raising the $1 billion based on the feedback we've got from the feasibility study and net metrics. If you look at what we've raised in Kabanga since we started in 2019, it's actually $210 million. And that's just about all gone into the ground there to develop where we are at the moment. And for a commodity such as nickel, that's been pretty hard to raise money. And we're pretty proud of the fact that we've raised the bulk of that $200 million in the last 2 to 2.5 years, when nickel has not been the flavour of the month, I must say. So yeah, we're full steam ahead. We want to get this project built as soon as possible. So does the government. So we're well aligned there.
And before we let you go, Keith, what's the big takeaway?
Well, firstly, I want to say thank you to our people in Lifezone and Tembo. And we built these teams, both Lifezone and the Tembo teams, essentially from scratch since 2019. And we've used sort of a mix of well-experienced professionals, like the crusty old blokes like me with the grey hair, and we've got that grey hair through experience, so experienced professionals. And then we've pulled in a lot of really smart, less experienced engineers, social scientists and corporate people, and we've really empowered them to go and do what we think they need to do. And to have delivered the initial assessment and the feasibility study, 2 big pieces of work within a month of each other. There was many parallel work streams and everyone really was putting in all the hours they could. And then to have delivered that $210 million of financing in Kabanga, our corporate finance team's done an amazing job there over the last 3 years. So a big takeaway for me is a big giveaway, and that giveaway is the thank you to all of our people for really the effort they put in. But for me, the takeaway is that it's all achievable because Kabanga is such a great project. I mean, it's got the high grade and the big scale, and I've been 45 years in this industry, and it's the best project that I've been involved in by far and far away. And I've been involved in some really good projects, but Kabanga is far an order of magnitude better than any of those projects. I firmly believe that Kabanga, as probably the last project of my career, is going to bring big benefits to the people of Tanzania, and we really want to make sure it does, and benefits into our Lifezone shareholders, who have, some of them who have supported us for decades. So we think there's a good benefit there. But most importantly, the big takeaway is I've enjoyed it all. I've enjoyed my whole career, but to finish off with something like Kabanga, which is really immensely enjoyable because just know what it's going to be based on all the experience, is like you've got to enjoy your work because you put much into it. And that's really my takeaway from Kabanga, is it's enjoyable. I've enjoyed the people, the work, the project, all the interactions with the Tanzanian government. They have been a breath of fresh air, and long may it stay that way in terms of the communicability and cooperation and friendliness. And then all the way down to the people on the ground, the locals there want us there. They want us to build this mine. They want the benefits that it will bring into these communities. So to be welcomed at all levels in a country is absolutely fantastic. And to me, that's the takeaway. We want to leave a lasting legacy of Kabanga That's what's really important to me, Martin.
That was Creamer Media's Mining Weekly, speaking to Keith Liddell, the founder and chairperson of Lifezone Metals. It has taken control of the Kabanga nickel project in Africa's Tanzania.